Welcome back. Time for the Word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee strategy founder, Michael Lee, and Bulltech Capital chief market strategist, Catherine Rooney-Vera. Great to see you both this Monday morning. Catherine, kicking things off with you with a busy week. Futures are trading higher ahead of a lot of economic data on tap. The final read of third quarter GDP is out on Thursday. Inflation report, the PCE, caps things off on Friday. Got a whole host of housing data coming out as well. What are you expecting, Catherine?
I'm expecting the final report of 3Q to show a robust third quarter growth number, 2.9%.
In that jobs number, Mike, look, yes, we've got a tight labor market now, but the layoffs have begun. Let's talk about these layoffs going into the new year. Goldman Sachs, the latest in finance, planning to cut up to 8% of its employees in January. Morgan Stanley has already announced 2% cuts of its global staff, Mike, and the list is long throughout technology. What is your take on the jobs market, Mike?
Well, look, it started with housing. Around April, May of this year, it made a dramatic turn for the worse, and we've gone from mid-80s in the home builder confidence index down to the mid-30s. Next was manufacturing, where we got the Philadelphia PMI came out a couple of weeks ago, giving us COVID low type numbers. Then earnings. You've already seen the earnings be revised for fourth quarter growth of 9.1%. We're expecting on June 30th. Now it's down to minus 2.8, could probably go lower. So the shoe to fall after that is unemployment. And so you're seeing it from Goldman Sachs and Morgan Stanley and a lot of the technology companies having massive layoffs. And ask yourself, who's got better insight into the economy than a lot of these financial firms? And if they're betting with their own wallet that it's time to tighten up, what do you think that means to, what is coming next? So I kind of agree with Catherine's thesis that we're going to see a contraction, most likely a heavy one in the first and second quarter of next year, with unemployment spiking. If you look at what's happened in housing, traditionally, historically, the unemployment rate doubles over the next 12 months with the collapse that we've seen. Hopefully that is enough to crush inflation, and so the Fed can take their foot off the gas and crushing us with these tighter financial conditions and higher interest rates.
Michael, will there be anywhere to hide in the sell-off that is sure to come along with this weakening in the economy? I mean, you look at growth versus value. Tech stocks have had a horrible year. You're talking about double-digit declines for the major tech companies. I'm talking about Google, Meta, etc. The EU is now going after Facebook parent Meta. It's only getting worse in terms of what we're hearing on Twitter. Do you see any value here?
So the stock that I'm going to start accumulating for a multi-year hold over the next few months is Amazon. I think that's, a tech and consumer stock that's going to work. I mean, the stock is trading at almost the same level it was pre-pandemic, and given how much bigger they've gotten over the last 3 years, it's one to add. And the other place I'd be looking is fixed income. This has been a horrific year for the long bond and for the 10-year Treasury. So I'm increasing my position in TLT, which is the 30-year Treasury, or the long bond proxy. I think duration works next year, even though short-term interest rates go up as long-term interest rates come down and the curve inverts to an even greater degree. That next year should be a great year for fixed income. So what's been horrible for individual investors this year is the double-digit decline in fixed income. Okay, it's all right to be down 15% in the S&P 500, given how much we've moved over the last decade, but given how little fixed income has returned over the same period of time, to be down that much this year has been a particularly kick in the stomach. It's been very difficult to handle. I think fixed income reverses course next year, and at some point, the stock market turns in the third or fourth quarter of next year, and we're off to a new bull market.
All right. Well, great analysis there. Catherine, Michael, great to see you both. Thanks very much. Catherine Rooney-Vera, Michael Lee joining us. Great Word on Wall Street. We'll see you soon. Quick